How's it going, everyone? Welcome to another episode of ACC Podcast. As always, I'm your host, Steven, and I am excited to be here today along with Han Liu. He is the founder and CEO of BitFi. This is Founder Stories. Really looking forward to getting into hearing the journey of Hans all the way from the Wall Street to AscendEX and now to BitFi. I won't want to get too far into it, jumping ahead a little bit there, but Han, thanks so much for being on the show. Welcome. How are you doing today?
Good. Thanks, Steven, for having me. Really excited to be here. I really like the intro, by the way, the little movie you did in the beginning.
Thank you. Yeah, ACC Ventures is doing really cool stuff, and excited to be sharing all about a concept, CeDeFi. The concept is relatively new for me, but I knew about it, but never put the word CeDeFi to it as well. So, for our viewers out there, Han here is pioneering the Web3 space and really pushing for Bitcoin utility. And we're going to get into centralized, decentralized finance. CeDeFi, I guess, is the word for that there. But before we get too far into it, Han, how would you kind of just introduce yourself to people who are getting to know you for the first time?
Sure. So I guess, hi everybody, I'm Han. I'm the CEO of BitFi. So I think, Steven, you mentioned the word CeDeFi. That's exactly what BitFi does. I think crypto we're very good at coining new terms. It's actually not that magical. So basically what we do is we provide a platform to generate real use for our users, simultaneously from the CeFi, centralized finance area, and the DeFi source. So that's what we call ourselves, a CeDeFi platform. So that's like a very simple intro of what BitFi does. If you want to do any details, the CeFi side, we are pretty much a Wall Street grade fund of fund. We deploy our user assets to super robust risk control, low risk funding teams to trade for us. And at the same time, our DeFi token, BTC, can be used to deploy to our DeFi ecosystem partners to participate into their ecosystem to get rewards from them. It might be in the form of tokens, sometimes in like Bitcoin, even Stablecoins or Point, etc.
Awesome. Yeah, you mentioned there a fund of funds, and immediately I think of index funds, mutual funds, and I think that may very well touch on some of your history with Wall Street, working for BlackRock as a quantitative analyst developer. So kind of what's your origin in the world of finance? And then we'll kind of get closer to crypto. But it sounds like you spent some time in Wall Street.
Yeah. Actually, I've been around working for quite some time now. My first job was back in 2012. It was at BlackRock. So a bit of my background, I came from a tech background. I studied computer science from Carnegie Mellon. And usually when people graduate computer science from Carnegie Mellon, there are two ways to go. Half will go to the West Coast to work for Silicon Valley, firms like Google, Facebook, and half will go to the East Coast to New York to work for Wall Street, for capitalism, if you will. And I played pretty well with a good friend of mine. He went to Goldman Sachs. He was the 1 year senior to me. So I kind of knew this world better. So I interviewed for BlackRock. Really liked the culture there. So that's how I ended up at BlackRock in my first job. So I was there as a quantitative. Technically, it's called financial modelist. My team is called Financial Modeling Group. So basically, I work with a whole bunch of math PhDs, super smart people. They take a research paper from the industry and convert them into potential trade returns. And what I do is I did part of the analysis for them, and I also do part of the sort of implementation in terms of how to convert the math model into feasible trades. So that's sort of where I started my career. I was there for 3 years, and then I decided to try something new. I then went to AQR Capital Management. That's a hedge fund in Greenwich. So I was there. Was doing similar stuff. AQR is a pure quant shop. So they take a lot of research paper and then they converted them into trades. So I was there. I did a lot of work on the risk management side. How to calculate risk, how to make sure that the trades falls within the risk parameters, both from a trading perspective and also from a compliance perspective, etc. Was there for a few years, and then 2018 came. Right, so that's I think late 2017. That's when the ERC20, the ICO
Yeah,
wave
big time.
hit. And being a tech nerd myself, I was really into this kind of stuff. It's crazy, smart contract writing code, and then everyone seems to be just generating, creating coins out of nowhere, and everyone seems to be doing so well. I was hooked, right? And another thing that got me was at that time the market was so inefficient. If you look at Gemini and Coinbase, the two major traded exchanges in the U.S., that's the two I was looking at then. Visible price difference. You can see Bitcoin here and there. They're like just the price is very much off. So I wrote a little bot. I did some trading. What we call it arbitrage. I buy low, sell high. But I did it for a few months and made some small money until I guess bigger players came in. Then my algorithm, wasn't competing with them anymore. But that got me sort of interested, and that's when my partner at AscendEX, also the CEO George, he came to me. Hey, I want to do this exchange, and I need a tech partner to work with. So I was sold on the idea. So that's how I got into crypto, and that's 2018.
Yeah, I like what you touched on there, the whole ICO craze and how everybody seemed to be doing well. I know that we could probably get lost in a conversation about, speculation and the right mentality to have with the market, which we'll probably get into at some point. So I want to take a brief backup and touch again on something you said when you mentioned your involvement with BlackRock. You said some people go to the East Coast, some people go to the West Coast, but it sounds like what really drove your decision was the culture. And given that you're the founder of BitFi, I just think that that's an opportunity to give you an opportunity to share about what is important to you about company culture, given that you're the CEO of BitFi. So, what can you say about the culture that you're trying to cultivate there at BitFi, and maybe even touch on how that could have come about from what you experienced in BlackRock or any of your previous experience?
Yeah, of course, of course. I think for any company, small or big, right? The goal is to be to deliver results at lowest cost possible. So everyone else wanted to optimize stuff, right? So one thing I learned back in culture at BlackRock was that given that it was a huge company, that's 10,000 people even back in 2012, the culture was relatively flat. There was not so many hierarchies of command, chain of command to go through to get something done. I remember the first day I was there, I didn't know anything about ranks and stuff. So the head of the team, I remember his name, super nice guy, Yang. He's a managing director. That's super high in the rank. I didn't know that. I had no idea because he was like just sitting on my side trying to set my computer for me. I later learned, oh, he was 4 ranks ahead of me. Yeah, I was at least 10 years away from being where he was if I got lucky. So that sort of hit me because that sort of changed my perspective of what I imagine Wall Street to be like,
Yeah.
right? And to be frank, a lot of like big I guess investment banks, they still have that culture and understand why that exists, but that ultimately that doesn't help with the productivity. So what I try to do at BitFi, similar to what I did at AscendEX, was very clear guideline of what is expected of everybody, right? I don't need ranks. I don't need you to listen to me, listen to everything I say. But when we agree on a set of goals, that's what we should be expecting each other to complete. And if things come along the way, we deal with them. But we need to be efficient, and effective, right? We don't want any politics, but we don't want to reduce the potential politics in workspace. It's inevitable, as I've learned, but I want to reduce that. So I think as a result, the teams I currently have at BitFi, everybody likes everybody else. It's a great environment. Everybody's here. First of all, because they like what they're doing. Obviously, everyone is aligned on the vision. People think that BitFi is doing something sustainable, so that there's growth opportunities. But at the same time, people come to work every day, not waking up saying, "Oh, just another terrible day ahead of me." Right. So I think that's super important long term for a company to succeed, especially for small companies.
Yeah, I love that. I think it's always meaningful whenever anyone who is higher rank, either, it's one step ahead or 10 steps ahead of you, is willing and able to kind of meet you exactly where you're at. And yeah, I really enjoy hearing that from you because obviously I don't work for BitFi. But right away, it's like, hey, I would work for you. It's like anyone who finds value in that, that's somebody who I feel like there's a lot of opportunity with. We see, see eye to eye, and we can approach problems kind of as
Yeah,
they come. So yeah,
appreciate
go
it.
ahead. Did you have something to add there?
No, I said
Yeah.
I appreciate a
For
compliment.
sure. Cool. So you kind of stopped yourself before we started tipping into BitFi itself. So let's kind of dive in just a little bit here. So it's 2018, maybe probably at this point, maybe the beginning of 2018, as Bitcoin is now dropping from 20K, but everybody is still thinking that it's going to continue to go on forever. Maybe ICOs are still going all throughout 2018. But you are shifting at this point to AscendEX. Is that correct? Cool,
Yes,
cool.
yes.
So kind of give us the rundown as, the 2017, 2018 bull market, euphoria craze kind of dies down. Touch on how that led to BitFi, and yeah, touch a lot about mentality of the bear market, because here in 2025, even though Bitcoin is over $100,000 and some other altcoins have been doing relatively well compared to others, it still seems like there hasn't really been one solid, like, irrefutable state that, like, we're in a bear market, everybody is winning. So a lot of people are losing. A lot of people are still losing a lot of money. So take us back to 2018, how you're feeling, how the market's feeling, and how you kind of transition from AscendEX to BitFi.
Yeah. So 2018, beginning of 2018, there was a lot of hype. Bitcoin was, I forgot the price, not close, not even close to 100K. We wouldn't believe it
Mhm.
if if someone traveled back in time, tell me, hey, Bitcoin 100K. But I think everyone was very optimistic about this new industry. There's a lot of opportunities, right? Monetary opportunities, or technical opportunities. So, like I mentioned, the founder of AscendEX, we were named, we were called BitMax back then,
Gotcha.
BITMAX. In 2021, we went into AscendEX. Came to me like, hey, look, this is like the next big thing, right? Join me, build this. And honestly, Steven, back then, my mentality was very simple. So was a new industry. Yes, a lot of opportunities, but it's all super volatile, right? So what I told myself was, okay, I'll give myself 2 years. I believe, given the state of this industry, in 2 years, it will either have been so successful that I was like, I could be done with my life, or this industry would, be destroyed and I go back to finance. It's just 2 years of opportunity cost.
Yeah,
It's nothing.
yeah,
So then, 8 years later, still in this industry, right? So I think that's good because we see this industry kind of, the volatility is slowly decreasing, it's getting more and more mature, and the growth starts to stabilize, similar to the path that traditional finance followed in the last 100 years. So I think that's a good trend. So 2018, I joined. We started writing I was actually the number two employee, or part of the founders. I wrote the first line of code at AscendEX. The matching engine that currently AscendEX runs is still my
cool.
code, because it's so deep that if it runs, don't touch it. Right, that's kind of. And like you said, Stephen, from 2018 to 2024, last year we went through so many cycles, bulls, bears, and internally at AscendEX, a lot of challenges as well. Obviously, it was first time we built something from scratch. So every single, back at the big companies, you're in a very comfortable place. You just handle your responsibilities, right? You manage your risk engine, you manage your trade optimization engine. You don't worry about infrastructure, security. That's like all taken care for you. But at AscendEX, you got to take care of everything, right? And that was, a lot of challenges, especially on the security side. Right? So we realized that given the kind of wild west state of crypto back then, we were like the prime target for hackers. So a lot of interesting stories there, but it won't get deep. This is not about AscendEX, this podcast, but I guess this few years I did a lot of things. I learned a lot of things, and went through the cycles, or sort of became more and more rational about what to expect in the industry. So fast forward last year, 2024, in we started about May, right? That's when I started BitFi. So a couple of reasons, I guess. First of all, I felt that my work at AscendEX was done.
Hmm.
So the system was stable. All the primary features are there. The team was robust. The system was running 24/7. No issues, right? That was it's kind of nightmare for the first few years, having to wake up at 3 a.m. to debug something. And then we saw opportunities like, the industry was starting to get more and more mass adoption. The Bitcoin ETF was approved. We see institution money inflow that was driving the market up. Unlike the previous bull market, that was mostly driven by, say, DeFi or like retail capital. So that sort of like resonates with my days back at traditional finance. So it's like asset management is going to be a critical business now that people are starting to get more and more calm and rational in their expectations of what this industry can bring you, right? Because say 3 years ago, if we're doing something that generates a 20% yearly return in crypto, people are like, this is not sexy enough. We count returns by X's, right? 2X, 5X,
Yeah.
10X. Well, it was not sustainable, right? Because at the end of the day, you really need to understand where the money comes from. Ultimately, they come from the productivity of the society. There's no way 10 times of values are created, and that was because the market was too volatile. Last year was getting better, right? And we saw this opportunity. I think asset management is going to be a great business going forward. Also, my background is quite aligned on this as well. I had a couple of co-founders with me who were sharing the same vision, and also some backers who had a lot of Bitcoins that they didn't know what to do with. Right, they sit there, they were just doing nothing. They didn't want to put them into DeFi because they didn't know much about it. It's too complicated. They were just losing it. They didn't want to give them to random asset managers either because who knows, bad things could happen, right? People saw FTX, people saw Celsius, all this kind of stuff. So that's when I started to talking to people. Hey, I think we need to have a very professional asset management business, especially around Bitcoin, given that also the BTC Fi was starting to thrive back then. We have a great team, we have great expertise. We also have a lot of knowledge in the DeFi space as well, so we can combine them all together. Let's try it out. So that's what we did, and that's sort of what has been driving me and waking me up for the past year.
Hopefully no longer at 3 a.m, but I'm sure those. Well, maybe you're back to being woken up at 3 a.m.
Well, it's better now since I have a tech team. I have a CTO now, so I don't need to wake up myself.
Good.
Yeah.
Cool. So it kind of sounds like obviously the history you have in finance and your education, your time spent on Wall Street, and then getting involved in AscendEX. I was curious myself about that. What led you to BitFi after AscendEX? And as you just shared, your time, you felt like mission complete. AscendEX is still doing what it's doing and is a top 20 exchange, if I remember correctly. And it's exciting to see that you've acknowledged that, hey, there's something more we can be doing here. So do I understand correctly that you just kind of you had a lot of people in your circle who owned Bitcoin, then you're like, hey, I want to help out these people, and if I know enough of these people, I'm sure that there are countless others with Bitcoin who don't really know what to do with them?
Yes, I could have said it better myself.
Yeah, perfect. Cool. So I guess my biggest question, because the biggest buzzword probably around blockchain is decentralization. So I think most people watching this video will understand why decentralization is important, but might get hung up on how exactly centralization kind of ties into it. Yeah, I think you've done a good job tying it in a little bit of a bow, kind of at the very beginning. You give a little bit of a pitch, but for those who, let's say, are just now hearing CeDeFi, like what is it, and why does it make sense? Like, we will have decentralization. We want to get away from centralization, but why is centralization a positive thing at some point?
Yeah, that's a great question, Stephen. I actually firmly believe, even though I've been in this space for 8 years now, that decentralization is not by default the correct answer. So the reason why decentralization is important, especially in crypto in many cases, is because it creates an environment where you don't have to trust each other. Right? It's more like trustless, permissionless. But I think I'd like to really share my opinions here. Is that trust is rare trait. It's a positive EV trait that can really help help with productivity. Imagine a world where everyone can, if you can assume that you can trust everybody and everybody can trust you, there's not going to be a betrayal of trust, then there's actually a chance to build things faster. But in reality, that's not always the case, especially when it comes to finance sometimes. you cannot trust people. So that's why decentralization at critical points where trust is most valued, and and also like the least guaranteed, this can come in to really help with it. So I think that's why decentralization is important, but it's not necessary everywhere. So back to the point of CeDeFi.
Could you
So
hit on that?
why
Sorry to
we
interrupt.
argue?
Could you hit on that point one more again? You kind of shared some things, how assuming everyone can be trusted, especially in finance. And then I feel like at the end there, you really pinned a point. What value it adds. Can you repeat that for us?
Yeah, I think decentralization, I guess, is the most important, where trust is the most valued but the least guaranteed. But that doesn't mean that trust is a bad thing. It's a good thing. It's a very good thing, right? But it's but by definition, sometimes if you trust and then you get betrayed, then the cost is very high. So it really depends on like the situation where decentralization versus centralization can balance each other, right? So for example, when it comes to saving your private keys, you probably don't want to just blindly trust everybody because too much is at stake here, right? Yeah, but when it comes to saying, are your friends borrowing your pen and say, I'll give it back, then you don't want to, hey, you know what, let's get into a smart contract to do that. There's no point, right? Because it's very not cost effective and less is at stake. And then you sort of understand that there is trust there, right? So how does it apply to the business model? So given that decentralization eliminates the need for trust, there's a cost. The cost can be efficiency. The cost can be, liquidity, right? That's why, it's not free to build a blockchain. There's gas fees, etc. And when it comes to trading, that's especially more so. If you trade on centralized venues like Binance or Coinbase, because matching engine or AscendEX, the matching engine was written like in house, it's super fast. Right? You can have you can have a nanosecond level latency and hundreds of thousands of trades per second as throughput. You cannot do that on DEXs because sort of every trade ultimately needs to be confirmed in a trusted manner, right? So how do you balance this? So it also, I think this depends on where the state of the industry is. And say in 2017, I probably, if you talk Binance, people would think that I wouldn't put a lot of money on Binance. That seems to be like a new exchange. We don't know who CZ is, and it might go bankrupt. But nowadays, people rarely talk about, hey, what if Coinbase goes bankrupt? What if Binance goes bankrupt? The possibility still exists.
Of course.
But it's less so because the industry is more mature and more well built. So basically, the opportunity cost of trust has decreased. So on the other hand, then it starts making more and more sense to put your assets in there. And that's sort of like the sort of CeFi side of our CeDeFi business. If you look at, from a fund of fund perspective, if you look at all the trading teams that we talk with, when the same strategy, if they trade on Binance, OKX, or Coinbase, or versus some DEXs, the return can be humongously different because the liquidity is different. Binance and Coinbase, obviously they're the best. And a lot of users, retail flows, institutional flows, so it's much easier to capture the efficiency and make money for you. But on DEX, it's way more difficult. And not to mention that you expose yourself to on-chain security of the DEX being hacked, which nowadays people can argue might outweigh the risk of, say, Coinbase going bankrupt or just rug pull everybody users, right? So that's why I think also, not just because I say it, because I think if you look at the industry consensus, people start to buy into this idea. When institution like capital came into the industry via ETFs and stuff, it's already sort of a testament that centralized crypto it's okay, right? Not everything needs to be decentralized. When it comes to again, only the critical pieces where decentralization matters the most, they need to stay decentralized. But at the same time, on the DeFi side of the CeDeFi business, we still see a lot of great projects out there, partners out that we work with. They're building cool stuff on chain, right? Why not also participate in their ecosystem, right? Contribute our liquidity and help their community grow, help the industry grow. So we do both at the same time. We trade and then we participate in the ecosystem, and we get rewarded on both. And we also help both industries by participating in them. So that's sort of the core business model of the CeDeFi that we do today. Yeah.
Nice. Thanks for allowing me to interrupt there and reiterate on some of those points because, like I said, as I asked the question, as someone who is 100% all money on decentralization, having the word centralized brought back into the picture could ruffle some feathers, but I think that is a overused concept, the idea of decentralization, because obviously, like, all of these products, all of these cryptos, like, they're not perfect. Nobody's perfect, and everybody has a team of developers. And what really is decentralized, and I think that people misunderstand decentralized networks to mean decentralized teams and decentralized everything. And I think that bringing in and just being transparent about it, like, hey, like, we're not gonna claim that we're decentralized through and through just to hop on the bandwagon. Like, we're actually centralized, and this is exactly what we can bring to the table through our centralized infrastructure, through our experience and so forth, that your random dex that just has the automatic market maker in between, or maybe even has some security opportunities. Like, those are opportunities that you don't have to worry about, or rather those are weak points of failure that don't need to be all on the user. So this really kind of rings my bell. Between Web 2.0 and Web 3.0 is a term that will probably not go too mainstream because we already have too many webs as is. But Web 2.5, kind of this idea of the abstraction of Web 3, of blockchain, of crypto. And I was speaking to the founder CEO of Fetch AI yesterday, and he was talking about how important the abstraction layer represented by artificial intelligence and agentic agents coming in and kind of being that layer of interface. So it almost sounds like CDFI is almost the financial realm's equivalent of kind of like this Web 2.5, where it's not all the way decentralized, even if some people who say that they're decentralized are not, but it's still using the technology, still bringing in the good pieces of Web 2 and kind of bridging that gap.
Yeah, that's a great analogy. I like it. Yeah,
Cool.
I think that totally makes sense.
Love it. I love that whenever who I'm talking to says I make a good point, because, like, the point of these videos, like, I'm trying to get to a point where I'm genuinely learning. If I'm learning and hearing about things and understanding things, then I believe that the people watching these videos are as well. So
Yeah, likewise. I really enjoyed this conversation so
love it,
far.
love it. So let's hear from kind of just the biggest lessons that you learned from your previous experience. Like, if you want to give a snapshot of your day to day, or just touch on what some of those biggest lessons you've carried into your role these days from your previous experience. What would you say those are, Han?
Right. I think during my 6 years as AscendEX, one really big lesson that I learned that I think that can be carried very, very 100% to BitFi is the importance of risk control. That sounds like common sense, but it's actually when you actually try to execute it, it's more difficult than you thought. But I think some of the audience might know that AscendEX actually got hacked in 2021 by a group of North Korean hackers. They were really good, by the way. Just give them credit for that. But we also did something wrong back then because 2021 everyone was growing so fast. So we realized that you cannot have 100% risk-free environment. It's always a trade-off. But given that the business was growing so fast and there was so much demand for growing even more, we decided that having that trade-off of, say, shifting more resource on growing and not as a proportionally growing resource on security was a warranted decision. That was not. And so basically, what it turned out, what eventually happened is a lot of the effort that people put into that over the very long period of time could vanish overnight because of one security issue that got compromised. That's one thing that I learned, that if there is a loophole in your software, someone will find it eventually. The only question is whether it makes financial sense for those who find it to exploit it, and that's the whole point of building a security around it. you increase the cost of exporting your system, not eliminate the possibility of it being exploited.
Mm.
So the same, why it matters to BitFi, because a couple of things. So first, we do CeDeFi. So on the CeFi side, there's risk associated with that, and on the DeFi side, there's a complete set of risk parameters associated with it. So on the CeFi side, on risk on asset management, right? First of all, we cannot speak for the security for Binance, but like we just talked about, the trust there is more than before, right? The risk there is lowest ever in history. But at the same time, how do you do risk control on your fund managers, right? Even that, maybe touch a bit more on our CeFi strategies. We mostly employ delta neutral strategies, and for the audience who are, I guess, a little bit unfamiliar to the term, that means our strategy expose ourselves to price movement in Bitcoin, for example. So we long here, short there, and then we take the arbitrage opportunities. Well, on paper, yes, Bitcoin goes up and down, even crashes, or it goes 100x, doesn't affect your performance. But how can we guarantee that the trading team implement that way, right? It happened in traditional finance as well. Back in the day when the risk control framework was not so established. So a rogue trader might fat fingered and then lost a lot of money, and decided that he didn't want to expose that, so he doubled down, trying to make it back, and then lost everything. There were like a couple of very very prominent examples in traditional finance. And the most prominent one is, I think it's called long-term asset management. Or I forgot it's a very long name. So it was known for going bankrupt because one rogue trader did those things without being noticed. So that's one thing. So we spend a lot of effort building a risk control system, starting from the doing due diligence on the team, making sure they're legit, to signing contract, to sort of have a framework on what you can and cannot do, and most importantly, we have a in-house built risk control system. We monitor their trades, we monitor their position. You say you're delta neutral. Why are you accumulating Bitcoin position? Right? So that we can get notified, alerted, and worst case, we take over and cut loss. Right? That's super important. That's actually, when it comes to asset management, risk control is the number one important factor. Not to your strategy return, not to your drawdown. Risk management, number one, because literally you can lose everything. You can never win enough, but you can lose everything, right? And that's number one. On the DeFi side, obviously, when we interact with dozens of different protocols across different chains, the chance of at least one of them getting into security issues increases the more projects we work with. So how can we mitigate and to prevent those from affecting us? But that's also what we spend our time resource on. So just, I guess, without getting details, one thing that we must absolutely prevent is, say, someone hacked into a smart contract on this chain, and then they minted out of thin air 100 BFBTC, and then come to BitFi and want to convert them into Bitcoin, right? Once this conversion happens, that's game over. Mm-hmm. So we prevent that from happening. So it's a very simple thing we do. So we monitor how many rep Bitcoins or BFBTC we have on each chain. Because those are on chain. That's the good thing about blockchain. Everything is public. So we see that, we reconcile with our knowledge of how many there should be. Any discrepancy happens, say, today we see that there's 2 BFBTC on ERC20 that we cannot reconcile. We don't understand where it comes from. We shut off the redeem switch, so that we sort of quarantine the problem to that specific chain of project. So these are the things that we think are very important, because when it comes to security, it's like no news is good news, right? When it runs well, people don't hear about it. But when something happens, it comes in and make sure you don't lose everything. That's super important. That's the key to building a sustainable business, which is what we're trying to do.
Yeah, that's funny. You've had a few key quotes there that I really liked. You can win a lot, but you can lose everything. I think you had a different way that you stated that. And then that last one you just mentioned, no news is good news, which is pretty contrary to the idea in marketing that all publicity is good publicity, which is not really the case. I mean, conceptually it is, but sometimes too much publicity means that you crashed and burned and you're gone off the face of the planet.
Exactly. There's a saying back in Wall Street. I learned it from Larry Fink, who's the CEO of BlackRock. So he's very good. He like every year I'm not sure he does that anymore, but every year so he will like host a speech to all the new analysts that they hired for new grads. So one thing he mentioned was that if you do something great, you stay on Wall Street Journal for 2 days. And if you mess something up, you stay on Wall Street Journal for 2 weeks, right? And then there's, I guess similar is in crypto, right? So let's say a project successfully raises some money, you see that for one day, but then they got hacked, and everybody uh, chases down for a very long time. And when it comes to securities, it's especially the case, right? So no one, you rarely see news saying, "Oh, this audit firm has built this security framework that audited ABC." You only hear about them when one of the projects they audited, got hacked, right? So that's why when it comes to security, no news is good news. That means people are doing this job.
Yeah, love that. And another good piece of advice. Shout out to Larry Fink. Is he still the CEO over there?
I think so. Yeah.
God, yeah, that's fun. I had an internship with the Vanguard Group, and it's a huge corporation, and I was in the advice area, kind of pursuing a career in financial planning, which kind of Web3 kind of interrupted, we'll say. So here we are with that for me. But yeah, just getting back on our outline here, you touched on some of the biggest risks, which really is risk itself. The only thing to fear is fear itself. The only thing to risk or to fear is kind of risk itself. And controlling risk, you touched, is one of the main things that I think you kind of imply are centralized benefits. Having the control of risk, volatility is kind of negated by these delta neutral strategies. So what about that? Obviously, security, smart contracts being exploited, to maybe, really basic user, like, are there any other obvious risks that are out there that we should be made aware of, other than, not don't share your keys to your wallets and stuff like that? Like, any other risks? And then beyond that, I want to start talking about some of the opportunities here. But any final mentions of risk?
Sure. I think when it comes to analyzing risk in crypto, I always go by this term: when something seems too good to be true, it probably is. Right? When you say, this project, is looking to do 10x tomorrow, there's probably some caveat there, right? So just always stay vigilant, and I keep telling my investors, when you decide to deploy assets to a fund managers, look at three things. Number one, the return. Number two, the risk, or volatility, and number three, the source of return. Right, all three need to make sense. So you need to understand. Sure, you seem to be doing a really, really good risk-adjusted return, but where does the return ultimately come from? If you cannot explain that, then it's either non-existent or it's not sustainable, right? So the same principle applies to everywhere. It's like, be vigilant. If someone hits you up on TG saying, "Oh, I have this new token that's it's about to be, tweeted by Elon Musk soon, to buy it now," then ask yourself, why you, right?
Right.
So yeah, I guess that's just sort of, I'm not sure how helpful that is, but it's more like a general rule of thumb that I apply when it comes to like risk assessment.
No, that's perfect. That's, exactly what I was asking you to touch on. So you mentioned, though, and this kind of touches back on BitFi itself. Earlier in the conversation, you mentioned about how understanding where the money comes from kind of equates to the productivity of the society itself. And that reminded me, or I was reminded of you saying that when you mentioned the importance of the source of the return. So I'm guessing it's probably a little bit more technical than we have time to get into today, but you said it yourself. Understanding the source of the return is really important, and if something is too good to be true, then something's probably wrong. And then earlier you mentioned how 20% yields is not sexy enough whenever cryptos are looking for 2x, 10x, etc. So yeah, help us understand that. Where is the source of return coming from in BitFi, and how is it good but not so good that we should question it?
Yeah. I really like how you sort of like take my words and then starts to ask yourself to just justify that. That's great. That's great, actually. So I'll touch on the CeFi and DeFi source of return separately. So on the CeFi side, like I mentioned, is trading. Right? Let's say take Binance as an example. So a couple of our fund managers, they trade a delta neutral strategy on Binance. They take arbitrage opportunities. So why are they able to make money? It's the same way as how funds in finance make money. If you took any like time snapshots, just this very instant, it's like a zero sum game, right? That's true. Where you're making money, your Binance is taking some trading fee, you're still making money, then someone else is paying for it. Who's paying for it? Other players in the venue, right? Other people trading against you, you make money, they lose money. But why are you able to do that? Like, why people still trade? Because there's price discovery, right? So as the market moves, there's always a race to efficiency. So for example, let's just use one simple example. On Binance, some big whale just put in $100 million to buy Bitcoin. Price will go up in Binance, and then on the other exchange will follow in a bit, right? And why do they follow? It's because people are trading to make sure they get even. And those are the players similar to what our fund managers do. So they facilitate price discovery. They make sure the market is efficient so that the same price gets distributed efficiently. And the money they make is the reward they get for facilitating the trade. Right? That's sort of like a more sort of like fundamental reason of why it makes money. Right? But why is this sustainable? I think this will come to the you quoted me, Stephen, there perfectly. Is that ultimately it's a reflection of the productivity of like our society in general, right? Why we're on average U.S. citizen living more lavishly than say 18th century king, because now we're able to produce a lot more with what we have, given our productivity. So the long term, especially in crypto, one of the big assumptions that we have is that it's going to grow, right? The capacity is going to grow, and then overall the industry is going to get bigger. So most people in the space will benefit from the growth. Similar to how if you put your money in index funds, you do nothing, you still make money. Why? Because it reflects the value of all the companies in there. The companies reflect the things that they've been doing to help the world be a better place, for lack of better words. Right? So that's what we call the beta, sort of like the how to explain that? Like the general market is getting better. So overall, now everyone gets better off if this continues to be the case. And while this happens, we have the expertise to go in there and make those small amounts of money while we sort of facilitate market price discoveries. And that's sort of a very, very, very high level explanation of some of the trades does. Obviously, there are other strategies that we also employ that are more risky. They do take positions, right? For example, you mentioned the mean reversion. They run models to check whether, like in the sort of local shorter period of time, whether the price is too high or too low. Then they bet that it's going to return to that mean. If they bet it right, they make money. If they bet it wrong, they lose money to someone else who bet it in the opposite direction, right? But that's sort of like you can understand why there's return, and for that reason, how much just on the CeFi side, how much we're doing. If you take say USDT based strategy, we're doing probably between 10 to 15%. If you take it back 3 years ago, like we established, nobody would be like this. This is nothing, right? I talked to a team A, they give me 200%, right? But that was because market was not so efficient. Now it's getting better. But even today, if you take the say 15% and to the traditional finance, if a hedge fund can give you 15% sustainable return, they're the new star in Wall Street. If you look at Citadel, I think they made last year somewhere like 12%, and that's amazing. But they're bigger. 12% translates to say I believe billions of dollars of revenue. We don't have that in crypto, but that's sort of the advantages of the current crypto community have, which is that it's growing, but it's not so efficient yet. There's still opportunity for relatively bigger return compared to traditional finance, even though the capacity is smaller. But for most average users, well, sure, the Bitcoin has like a 2 trillion market cap. Finance has 200, but 2 trillion, would I say that's too small for me? No, right? Because for an average individual user, I think that's still opportunity. Of course, if you participate in crypto, the risk you're taking is that what if the industry doesn't grow? What if it goes down? That's the risk you're taking. But then this sort of becomes a more philosophical and subjective thing. Right? Obviously, I'm in this industry because my aggregated bet is that the industry is going to grow. So that's what I do. I help people have the same belief to make a good return on their investment with us.
Cool. Yeah, for those watching, as you said, Han, you were kind of planning on taking just a 2-year experiment to go down this path to see what happens, and here you are 8 years later. So, I mean, my curiosity, just completely aside from this conversation, is just where this industry really will go, and how it will continue to grow. So that's completely beside the point. Because I wanted to touch on something that we are talking about here. I asked you about the source of the return that BitFi is kind of generating here, and it sounds like there's some higher risk stuff, but the lower risk category sounds like it's kind of an arbitrage opportunity. So as CEO of BitFi, I'm curious how you're kind of planning ahead and planning to kind of get in front of the wave of kind of liquidity aggregators, right? Because the more liquidity is in a central spot, not so siloed, not so fragmented, the more efficient these markets come, obviously that's going to reduce the opportunity for arbitrage. It's funny how almost like arbitrage, if you know that you're faster than the others, you want the gap to be even slower so that that disparity in price is even greater, to take a bigger advantage there. So how are you positioning BitFi to kind of evolve with the times, in a world where liquidity aggregators and the market at large just all around just becomes much more efficient?
Right, right. First of all, Stephen, I want to mention that I think you were a really fast learner. You grasp the concept, so quickly, and then you summarize it better than how I put it.
Thank you.
Yeah, but to your point, first of all, like if market gets more efficient, that's always a good thing, right? That it only gets more efficient when more players come in, when more capital come in, right? So that means already, if when market gets more efficient, that's almost guaranteed that at the same time the market is getting bigger. So that alone gives us the economy of scale effect. So even though we don't do nothing, and then the industry just gets bigger, gets more efficient with more capital, then we can still run a sustainable business. But I guess again to your point, one question I do ask myself, and teams ask themselves, is what if let's say our competitiveness in the trading, we don't keep that going forward? Like what if there are other teams go in there and realize that we can do this better? So even though there's still opportunity to arbitrage, right? What if we're capturing a smaller share of it? And which is not impossible, right? We cannot. I mean, we think we have a strong team here, but there's always a chance that stronger teams out there are doing the similar things. So the way we hedge this risk is back to the point of like source of return, right? We are eyeing different sort of sectors that's inside CeFi. For example, like the RWA is become a very very popular topic these days. The simple ones might include the RWAs that are wrapped around a treasury, U.S. Treasury, like that give you the sort of inflation adjusted returns of 4 or 5%, right? That's right now maybe not sexy, but if the market gets more efficient, it might become more and more feasible source of yield for potential clients. And if we expand on that, we're also talking to potential RWA that work with private credit sectors. That in traditional finance is also the hot thing. I think the past 2 years, the market cap I believe it's close to 200 billion, if not more, size there. And potentially tokenization or RWA can solve the lack of liquidity issue that's facing the private credit sector, because a lot of private credit products they're hard to trade on the secondary market in traditional finance. But if you tokenize it, then voila, it's like liquidity on chain. So that's also something we keep an eye on. Although it's still early, we want to make sure that we be very strategic about that. But that's sort of in general what we do. We'll make sure that we don't lose out on potential opportunities to generate use for our clients. And but at the same time, on the DeFi side, we also keep an eye on the good new projects that are thriving, that potentially can benefit from our participation, and we can sort of like help them and then get our clients some additional yield as well.
Cool.
Hopefully that answers your question. Now I think I was a little bit here and there just
No,
now.
yeah, I mean it's a tough question, and it's a balance that I have to strike in these conversations. At one point, I want to be a champion for the space, giving opportunities to ask founders questions that they've been waiting for people to ask. But whenever a natural question comes on, it's like, well, this is an opportunity. I have to give them an opportunity to state, hey, this is why, this is how BitFi is going to stay ahead of the curve. So I appreciate you entertaining me on that question and giving that answer to people who may have it as well. So yeah, we're kind of down to just like that. Time flies. We're down to our last 5-10 minutes here. So let's kind of hone in just a little bit more on BitFi. Any key research and development going on, or any product milestones that users and the community can be looking out for?
Yeah, absolutely. One thing that we've been building for quite some time in stealth, probably gonna announce very soon, is our integration of stablecoin products. Not going to share what exactly those are yet, but if you go to BitFi.one right now, you can only deposit Bitcoin assets. But we do have a lot of users for stablecoin as well, and we realized that actually more crypto users out there have needs for their stablecoin grow assets return than Bitcoin. So we saw that needs, even though we started off as a BTC-Fi product, now we're sort of starting to fade away that concept for more like a all-purpose, all-season asset management, CeFi and DeFi. So soon, very soon, we're going to introduce products where users can generate real yield and hopefully the yield that people will like in terms of number with your stable coins. Yeah, that's going to be very one big thing that we're going to roll out very soon.
Awesome. And maybe you didn't even realize it, but I feel like that answer you just gave answered my last question. Like, as certain opportunities might fade away as the markets become more efficient, how is BitFi going to continue to stay competitive? And boom, here you are with these answers talking about how you're pursuing opportunities beyond where you started. So that's really great. And really, just in general, like, do you have any bold predictions for Bitcoin or Bitcoin finance? Of course, that's what brings us here today to talk about. But any bold predictions that you have for the space, or anything immediately that comes to mind that maybe years down the road you can find this interview back again and say, hey, look, I called it?
Yeah, if I didn't, I hopefully you don't come in. Hey, Han, totally,
Of course.
But yeah, obviously, my opinion don't serve as financial advice, as a disclaimer I learned from my Wall Street world. But I'm personally still bullish on
Mm,
Bitcoin, and not just because BitFi started off as a BitFi product, but just if you look at what's driving the sort of the bull run the last year, that's institutional flow into Bitcoin. And that's sort of iconic because Bitcoin serves to a lot of institutional investors, or to a lot of like Web2 or traditional investors. Bitcoin is their exposure or allocation to crypto. Right? Bitcoin is their crypto.
yeah.
But then, and I think that will be the case for a very long time, because mass adoption for Bitcoin is still not, I don't think the market is saturated yet. Right? So when people say, but more and more people starting to say, hey, why not allocate 5% of your asset into crypto? And what's your first choice? Bitcoin, right? Because it's most easy to understand, most widely known. But when you go one step deeper, say Ethereum smart contract, or now if you look at Solana, all those chains, there's impossible for a lot of traditional background people to understand. That might change in the future, but before that changes, I feel that there's still a room for growth for
Mm,
Bitcoin. And yeah, so I don't think I'm as bullish as say Michael Saylor is on saying Bitcoin is going to be $100 million in 5 years, but I feel that there's still room for growth. And personally, I long Bitcoin, and yeah, so I feel that given my believe that crypto is following a similar path as traditional finance did, so it's getting more and more. Um, the volatility is decreasing. The opportunities seem to have shrunk, but then it's getting safer and safer. So it's actually growing bigger.
yeah.
And so yeah, so that's sort of like how I feel. And obviously, another sort of sector I really look forward to seeing some breakthrough is it's the integration of AI and crypto, because I think so fundamentally it's what crypto provides being able to transmit data in an anonymous way, decentralized data aggregation and storage. That I think that can sync well with a lot of AI concepts. Although I haven't seen really a very promising integration yet, but I feel that the potential is there.
Yeah, man, you can't bring up AI in the last couple minutes here. The conversation will extend for another hour. No, but so that's great. Bold predictions for Bitcoin. I agree with that. Yeah, we'll see about Michael Saylor. He says that he'll eventually send his Bitcoin to a burn wallet. But yeah, kind of final wrap up question before we give kind of a call to action to the community here. So what about any misconceptions? Like I said, the CeDeFi was a new word for me, and we love bringing up all these different words and making up new concepts around crypto and finding new words for things. So are there any big misconceptions that you want to clarify about Web3 or about CeDeFi in general as we close?
Yeah, this might be a really opinion that some people might not agree, but I don't think Web3 is going to like really revolutionize Web2 similar to how Web2 revolutionized Web1. I think Web3 can provide its value add when it comes to the actual value add from blockchain technology and crypto and the benefits that it provides when it comes to lowering transaction costs and facilitating borderless transactions of all sorts. But I don't think it's going to be completely replaced Web2. And I say that because this helps me be more rational when it comes to investment decisions and when it comes to like what we expect from the industry. So I guess that's sort of one thing that I want to share. Right? It's just I might be a little bit on the not so optimistic because I could be wrong, right? But that's what my mindset is at right now.
No, yeah. During my research, I must admit that there was a panel of yours that I watched, and you just mentioned about how people just need to be calm and focused and not get too obsessed or carried away with the short-term gains and everything. So I think that's an honest take. I think that's important for founders and for CEOs to have that level of skepticism about where I'm at and where this might be going. So I think I see where you're coming from with that for sure.
Thanks, and I'm flattered that you watched my panel.
Of course, yeah. I would also encourage you. I could say this off camera, but I'm going to say it while we're still recording here. Obviously you're making strides with this video here, but I would encourage you to put yourself out there much more, sharing your thoughts, and especially as the founder here, looking forward to sharing this video with the world and sharing your insights with everybody. So yeah, pretty much like with that being said, is there any final thing that you would like to share? Maybe one big takeaway from this video that you'd like to connect with your audience before we say goodbye for the day?
Yeah, first of all, again, Stephen, really appreciate you inviting me here. We totally enjoyed the conversation, and thanks audience for listening through this. Again, like learning from experience, really one thing I want to share with everybody is just be very vigilant about the risk you're taking, right? So there's no free lunch outside of what is reasonable. So just be careful. And I guess if I may put in a little advertisement, so we're good at what we do. If you are interested, come talk to us. Try us out. I don't think you'll be disappointed.
Love it. Yep. As always, thanks again for watching. All of the important links to connect with BitFi as well as Han here will be in the description below. Yeah, don't hesitate to get involved and make sure to like and subscribe so we don't miss the next one. Han, thank you again so much for being here today. Hope to meet you someday in real life, but until then, I will wish you the best of luck.
Same. Yeah, I'm not sure where I'm in New York, so really happy to get a drink with you, Stephen, whenever you're around.
Yeah, I'll have to ask my boss. I am in Silicon Valley. I'm in San Francisco right now. So anytime you're in my neck of the woods, or if you know anybody on your team who wants to link up out here, let's make it happen.
Sure. I might visit there next month or so. I might see some investors.
That would be great.
But I'll let you know.
Alrighty. Well, thanks everyone for watching. Han, thanks again for your time, and we'll see you all in the next one. Bye, everyone.